Welcome to Cyber Insurance News and Information Podcast. I'm your host and the executive editor of Cyber Insurance News, Martin Hinton. And joining me today, a repeat guest, Dustin Carlson, president of SRA 831 Admin. And Dustin, welcome back. Thanks for joining us.
Yeah, good to be back, Martin. Thanks for having me on again.
Our pleasure. So I know we've got a court case that's really interesting to discuss that's relevant to you, cyber insurance, and the gap that exists between that and coverage. But for the audience joining us that doesn't know yet, take me through what 831B is. What is that in the elevator pitch world?
Yeah, so 831B, I always liken it to another section of the tax code here in the U.S., 401k. Everyone knows what a 401k is for the most part. It is an account you get to save up for retirement, and it builds a little quicker because it's not being taxed. You're taking tax deferred portion of your income, growing it in that account. 831B, much of the same way but it allows for a business to defer taxes on its revenue to save up for a rainy day. Things like a cyber event that your business might suffer, that your traditional insurance doesn't cover adequately. It's really just an alternative way to finance risk with tax deferred dollars using a section of the tax code.
So it's like a business version of the healthcare savings plan that exists, right?
Yep, that's a great comparison. Yeah, health savings accounts let you use that money to for certain health expenses. Works much in the same way. Absolutely.
So diving into the recent news, you were involved in a suit down in Texas, if I'm not mistaken, in federal
That's right.
court. Drake Plastic versus SRA 831B admin. Tell me about that case and how it came to be and the outcome of it.
Yeah, so like a lot of tax deferral programs, they have been abused in the past by promoters that use these to game the system, right? That's kind of how the people in the U.S. work. They always find ways to try to game the system a little bit. And so in the late 2000s, early 2010s, 831B was being used to avoid estate taxes. So we had estate tax attorneys that were using 831B to magically transfer a business owner's estate to their heirs, to their grandkids, to their children, and that was blatant abuse of the tax code. We agree at SRA that that's not how 831B should be used. And so the IRS has a bad taste in its mouth over 831B and those specific abuses that went on. And so in 2025, they issued some final regulations related to 831B, kind of in the final days of the Biden administration, right before the second Trump administration began. One of many government agencies that issued regulations at that time, just to be clear on that. And so we felt that those regulations were not, within the IRS's authority to issue, and so we sued the IRS last year in 2025, and in April of this year, actually on tax day, ironically, the judge issued an opinion in that case and threw out a portion of those regulations. And I can go into more detail of what those regulations were, and if you'd like.
So yeah, well, let's start with the if you will, the rub that created your need to go to court. What was it that administration or the policy change at the end of the Biden administration? How did it impact your business to the point where you needed to take legal action?
Yeah, so the regulations that were issued created reporting requirements for our clients and then anyone else in the 831B space using 831B. And what the regulations basically said was you're either a transaction of interest, and what that is the IRS basically saying, we've identified this transaction and we think it might have the potential for abuses. And so we want to learn more about it. We're interested to learn more about it. So a transaction of interest. And the second part was it created a listed transaction designation. Listed transaction, that is the IRS effectively saying we have all the information we need. We determined that if all of these factors exist, then this is an abusive transaction in all instances. And we had a problem with that because that affected a portion of our clients, the listed transaction part, but then broadly speaking, the transaction of interest part captured a lot of our clients because of the tests that they had, the factors they had that created those reporting requirements were very broad, and frankly not backed by evidence that the IRS would have gathered over time related to these transactions. And so we made those arguments in the Fifth District of Texas, and the judge found that, at least for the listed transaction part of it, where the IRS was saying, "Hey, we have enough evidence, and because of that, this is an abusive transaction," the judge found that they actually were severely lacking in evidence to make that determination. And so the judge, she threw that portion out of the regulations. She retained the transaction of interest portion of the regulations, which, those are the lesser of the two designations. It's being, hey, we need to determine if this is an abusive transaction versus you are abusive. Big difference there when it comes to the IRS in terms of penalties, in terms of, certain CPA firms won't even prepare your tax return if you have that listed transaction designation. And so to have that piece thrown out was a big win for us. We have gone down the road since then to appeal the decision to go after the full regulation, uh, because if they were lacking evidence on this side, then they're lacking the same evidence to do this over here as well, to the transaction of interest part. And why we sued in the first place, it creates a heavy burden for our clients that use 831B. You have to file a separate form with your tax returns. You have to fully explain, fully disclose the transaction. So, it's the form, but then also attachment upon attachment and attachment, uh, where you need to really get in the weeds with the IRS and fully explain. And down the road, if the IRS says, well, hey, you didn't disclose this one little piece as part of that, they can levy penalties against you and fines. So, burden to our clients, and a burden to SRA at the end of the day, because we're the ones having to administrate these plans and prepare all of that for our clients. And it's a battle that's been going on for about a decade now with the IRS related to 831B, because they were abused in the late 2000s, early 2010s. And we feel that the IRS, with these enforcement actions that they've taken, haven't really addressed the issues that existed back then, and are kind of throwing the baby out with the bathwater a little bit. And so it was a fight that we feel was it was time for us to get involved, and kind of enough is enough, and fight back, and try to get some better clarity. So
It sounds to me like they were punishing everyone in the class because one person was chewing gum.
that's exactly right. Yeah, that's a great analogy. Yeah.
Um, am I right? Just to break it down for me, the listed transaction part sounds like like almost having an indictment, right? That's like the grand jury process where they've in their administrative way that the IRS can and does, they've determined, at least from their own perspective, that you are guilty of something. Is that too much to say?
No, you're exactly right. And the judge basically says that in her opinion, that you can't say that someone's abusive, or someone's guilty of something with no evidence. And that's effectively what the IRS did, by creating that listed transaction designation.
Were they
And
they were basically working under the assumption, flawed or otherwise motivated, that if you engage in the 831B program plan, you are attempting to evade taxes, in this case, perhaps estate taxes, in a way that's illegal,
that's
right?
right. Yeah. They're basically slapping that label on you, regardless of what, the specific facts are of your certain 831B plan. They were just, painting with a very broad brush. And it's again, it goes back to abuses from over a decade ago. that ironically Congress has addressed most of these issues in 2015 when they passed, clarifying language around 831B. They've cleaned up a lot of the estate tax issues that the IRS had with it, but they continue to go after it. And not to go too far into the weeds here, but 831B is a subsection of 831 of the U.S. tax code, and 831 formalized what's known as captive insurance. And captive insurance, all that means is it's a wholly owned subsidiary company that you are self-insuring with. So it's a captive insurance company that you own and operate for your business. And under Section 831, you have 831A and you have 831B. And for a long time, the IRS went after Section 831A captives. And those are larger companies. So, companies like UPS, Best Buy, UPS, if you go and get their shipping insurance when you ship a package, they're putting that into their captive insurance company. They're using that to cover those losses there. If you go to Best Buy and buy the extended warranty on your television, they're putting that inside their captive. And so for a long time, the IRS was going after these larger companies with large 831A captives. And eventually, after some wins in tax court, eventually they lost cases kind of around 2012. They started to lose. And that's where you see the IRS then shift their magnifying glass to 831B at that time, and that's been going on for over a decade, where they've been saying, well, we lost the fight over here, now let's take the fight over here. And the encouraging thing is we're starting to see some signs that we might be approaching a time where the IRS might start to lose 831B cases, and maybe we start to gain more clarity in this space as well.
Was there, during the trial, and I apologize for not knowing this in advance, was there any testimony that might help understand beyond if your job is to enforce tax code, you find a way to enforce tax code? Was there any indication of the motivation or however flawed you might see it, their logic behind coming after, say, the way you administer these for the purposes of, gaps in, say, insurance coverage for a cyber breach?
Yeah, they paint with such a broad brush that it's hard to get them to drill down to specific scenarios and uh, hey, we operate this way. Is this appropriate? Do you think that's within the bounds, or that qualifies for tax purposes? The IRS has never been willing to sit down with the industry to even have that conversation. They prefer to paint with a broad brush. We have our own theories for why they do that. One of them being that, you know, scare taxpayers out of even wanting to use 831B, because who wants to draw the ire of the IRS at the end of the day? And so I think there's a little bit of strategy to keep things unclear for American taxpayers that might want to use 831B. So yeah, no, unfortunately, we have never been able to kind of drill down and say, "Hey, we do things this way. Is that okay in your eyes?" That's never been an opinion the IRS has wanted to give.
Conversely, did they have any specifics about how or what taxes were being evaded? Did they put any dollar amounts on it, or the apparatus or the structure of it that in their view was a violation of tax code?
So the two factors that they had inside of the regulations were related to loss ratios that you had within your 831B. So the amount of claims you were paying out relative to the premiums going in. And they had an issue with, so the transaction of interest designation, if in any given year, if you had a loss ratio less than 60%, they wanted you to file the additional disclosure with your tax return. And there are many insurance companies that pay less than even a 10% loss ratio. You look at things like surplus lines coverage, these special types of insurance that it, that you need to go to a specialty company for. A lot of those are paying less than 10% loss ratios. And so does the IRS think that those are real insurance companies? You'd have to ask them, I guess. And then on the listed transaction designation, it was a loss ratio of less than 30% over a 10-year period. And the thing we always like to talk about in the insurance, in when we are talking to the IRS or commenting about these, is You look at the terrorism program that the U.S. government created following 9/11. That has never had a claim under it in the 25 years now that it's existed. And so is that real insurance? Because it has a 0% loss ratio over 25 years. So there's just a lot of, I think what it boils down to is the IRS does not understand insurance. So you have people trying to, apply their own kind of thinking to it. To look and feel like an insurance company, they think you need to pay out all your premiums and claims every year. If you were to apply that personally, if I'm paying home insurance premiums, that you could theorize that the IRS wants to see my house burned down 60% of the time to be true insurance. And as we know, that's not the case. That's you pay your homeowners and you pray to God that you don't ever have to use it, right? And so the other factor was a financing factor, and this was if you were an owner of an 831B and then you borrowed the money out of the 831B, that it created that designation as well. We kind of see the logic there a little bit. We don't we disagree with them to an extent on that. We think that these insurance companies, these 831Bs, need to be able to pay claims at the end of the day. So it's a bad look if the shareholder is paying premiums to the 831B and then borrowing those out the next day. Are you really operating like an insurance company at that point? So, yeah, go ahead.
No, no, I was gonna say trying I mean, you've done a good job of saying they didn't really explain the logic, but that example there makes me think that there could be within the IRS some view of this as a mechanism for laundering money, right? Moving it through an apparatus and then loaning yourself.
Yeah,
I'm just
or a way
speculating
to
now.
or a way to get like a tax free loan from this company or
Oh,
and avoid taxes. I mean, and these are the types of abuses that do go on, but by and large, the companies like SRA, like our competitors in this space, you know, really since 2012, 2015, a lot of the folks, the industry has matured in that time, and is truly operating within, I think what the IRS would call within the bounds of how it should be operated. And so they continue to paint with these broad brushes, and that's really the issue. And I always tell folks that, again, with any tax deferral program, there's abuses, and you can go Google right now 401k abuses, and you can find abuses that went on last year with 401k. So again, the issue is we're not saying there aren't abuses under 831B. We would like to see the IRS be more specific. Maybe use a scalpel instead of again, painting with that broad brush. And we would love, we've been saying this for over 10 years. We would love to come to the table with the IRS and maybe show them some of the things we've seen, from other people in this space that they're doing. They may not even be aware of some of the other abuses that go on in this space that we've seen, and we would love to come to the table and come to a real solution. SRA, our 10-year target, our 10-year goal is we want 831B to be ubiquitous with 401k. We think every business owner should know what it is. If you have built your business to a level that you're now sitting back and worrying, I've grown this business. It's beyond my wildest dreams. The success that it's had. How do I protect it now? And that's the importance of 831B. You can take some of that risk off the table and protect what you've built. And we think it's important that every business owner is aware of it, at least as an option.
yeah, I mean, to hear you talk about it and to have spoken to you more than once before and read your op-eds on our site, there is this rainy day fund is not a complex idea. And the idea that you should be able to do that in a way that, doesn't allow for cheating, if you will, even on a personal level, it would be kind of an interesting idea that you could, have money set aside that can be used for very specific things and to help you, be resilient, right? That's the
Yeah,
magic word. So
absolutely.
let me make sure I understand things. You've got the the listed transaction element of this, the more serious of the two issues you had, was vacated by the judge. But the transaction of interest, meaning it's something that, if you will, puts up a red flag for the IRS, and they're like, well, we should take a closer look at that to make sure it's all hunky dory, that lingers. So, what's the next phase of this? Is there an appeal of that transaction of interest ongoing?
Yeah, so we appealed the decision be go to go after the transaction of interest part of it. And really what our argument is going to boil down to is, if it was determined they lacked enough evidence to say it was a listed transaction, then they lack the evidence over here as well, to make it a transaction of interest. So we've appealed that part of it. We still have not filed our appeals brief. That will come in the next month or so. And then the IRS also did a cross appeal, which we expected them to appeal that decision. So they are also going to go and challenge the listed transaction finding of the judge. And so that process will play out. There are also two other competitors of ours in the industry that have ongoing cases. CIC Services in Tennessee, in the sixth district there, they lost their case entirely in the sixth district. That was decided before our case. They've since appealed that decision, so that's going through the appeals process. And then Ryan LLC, also in Texas, has an ongoing case, so that has still not been decided in the fifth district there. So that awaits. So we could be setting ourselves up for going all the way to the Supreme Court potentially if that district split continues there between the sixth and the fifth. We could see this potentially go to the Supreme Court, and you know that'll be a interesting process to go through. So you know
You said you would love to sit at the table with the IRS. I dare say you might mean the word like. I don't know about love, but I joke. I joke. So this is, in the continuum of life, right? The Sisyphean reality of life, where we're just pushing rocks up hills. This is a bit of a win for you guys. This is a celebratory moment. What is it? What, as you sort of plan into the future, as you look into the future, as much as any of us can, what do you think this will do for the landscape of, making this more appealing to companies that may be a little more reticent? You mentioned, you know, no one wants to have the IRS call them, right? No one wants to be on their list, whatever it is, and obviously reducing the chance of that is something that makes, for a more risk-free, from a tax point of view, reality. Have you seen any change in that, or have you been, mentioning this as you seek new business, or what's changed since April?
Having that listed transaction designation gone definitely helps conversations. Particularly with the CPA community that we work with. CPAs, they're maybe even more sensitive to dealing with the IRS. They don't want to draw that because they know they're going to have to help their clients through that audit process and be there for them. And that's more time that takes away from them doing their normal tax work and all of that type of stuff. And so uh, you know, having that listed transaction designation gone, CPAs are definitely feeling more comfortable with it. That was definitely a roadblock in years past. Really, I guess in 2025 when this was in effect for CPAs, because they see that, and they see that as a higher audit risk, penalty risk, and then they also have their own potential liability as the tax preparer signing off on that return as well. And so it's definitely helped that conversation. I'd say by and large for us, the conversations have continued even throughout, this becoming regulations in 2025. Where really since COVID, we have just seen the business community be much more aware of the risk that they have that isn't covered by their traditional insurance. And so the conversations we're having all revolve around, I have this risk. How do I save up for it? Uh, you know, there, I always say our tax code is structured for incentives. that they give you a child tax credit because they want you to have kids and grow and grow the economy that way, grow the tax base that way. Some cynical ways to look at it, but I think that's true. And I feel like they have Congress passed 831B because they do want small businesses to be resilient. They want you to be able to save up for these events so you can stay a going concern into the future, and save up, and keep the payroll taxes going, keep the income taxes going, and so that's the importance of 831B as far as I see it.
I mean, you make a very, I mean, I guess, let me see if I understand this. If you tap into your 831B to deal with an unforeseen issue, a interruption of business as a result of cyber attack, to keep it in our lane, that money then gets spent in a potentially taxable environment, right?
That's right. Yeah, a lot of the events that we see our clients use their 831B for are business interruption type events, and that's covering a loss of income for them, loss of revenue to their business. So that right there is taxable as revenue back to their business. And then also additional expenses. So going and hiring a firm that's going to help them mitigate a cyber breach, or to help bring in identity protection for their customers. They're spending that money, absolutely, to help mitigate these types of events.
So you're proceeding with others in your field through the court system. You touched on Congress. Is there a legislative fix for this? And is there anyone in the House or in the Senate who's, looking at this, or is this maybe not sexy enough for this day and age?
We've been a member of a lobby group for about 4 years now, mini cap lobby group, and I've been to DC myself and met with members of Congress. They're all very receptive to this idea. They understand it. Particularly with when you give them the HSA comparison. And the great talk track is back to COVID, where if every business owner had an 831B plan in place to protect from that type of loss, would we have had to print trillions of dollars in PPP programs and yeah, ERC credits and all of that? You know, this helps a business owner be self reliant, be resilient through those types of things. So they understand that absolutely. And with our lobby group, I'm probably talking out of class a little bit, but we will be bringing some legislative proposals to Congress this year to hopefully be part of a reconciliation bill that might happen later this year, or in sometime in the future.
It does strike me politically as something that you could see someone who comes from the, stand on your own 2 feet, be responsible for yourself, mind your own p's and q's. There is a real, you know feature to this that falls into that category. And I mean, even again, I mean, you touch on the small business point of this, where we're talking about 90% of the economy is in that category, that providing these businesses. I mean, and the way COVID is a perfect example, right? I mean, if they have what they printed, or it'd been organized in a way that was designed to deal with the bad day when the bad day comes, because the bad days do come. That mindset is one. Well, as I think I told you, I was born in London. Even when it's not raining, you take an umbrella with you, right? Like that idea. Maybe not now
Yeah,
'cause it's blazing hot over there, but point be made.
absolutely. Yeah.
So is there any more you'd like to say about this? Because one of the other topics I'd love to ask you about is sort of more broadly into the sort of AI gap that exists now with all the things that are going on in that space in insurance, and whether you're seeing anything in the 831B world there. But before we jump off that, is there anything more you want to say about the case and what's going on, and what small business owners should be maybe asking their CPA?
Yeah, I would just say, if you're listening to this and you're maybe dismissing 831B because you don't want to have the IRS's ire, the IRS themselves have conceded that if when done properly, 831Bs are absolutely appropriate for businesses. And so that's the important part, is that you administrate your 831B properly, and that's where SRA we have a job. And just like you have a 401k administrator to make sure you're dotting your I's, crossing your T's there. That's our job is to make sure you're staying within the guardrails and doing things the right way. And so again, if you're doing things the right way, the IRS has agreed that this is an appropriate way to do business.
Lovely. All right. So the 831B is for when your cyber insurance policy doesn't meet the financial need you have as a result of something going wrong, whether it be a technical problem or a malicious breach. One of the areas that we're seeing a lot of conversation now is in the AI liability space. And the conversation is big because it's so relatively new. Does it need its own insurance? Is it the same as cyber? Is it just normal business insurance? Then you throw into that bucket the issues with agentic AI, where an AI may be given tasks where it can act and influence the world outside. I've had this experience. I had a flight canceled, and I received an email from the airline. I won't name them because I do like them, and it said, "Hey, we've rebooked you on this flight. No worries." So the next day, I was casually going about my business, and I had the same flight later that day, same time, and I jumped on the app just to download my boarding pass, and lo and behold, in the app, I was booked on an earlier flight. Frantically called the airline and said, "What's going on?" And I was told, "Oh, well, no, AI generates those emails, so that's not our fault." And I was like, I'm
That's not
not.
our fault.
But it's certainly your fault. It's
Yeah.
got your airline letterhead." So that's Martin's example of, I guess, at least the claimed agentic AI creating a real, I don't know about liability, but palpitation, made the flight. But that's a microscopic example of the kinds of things that could happen as these companies embrace things, and whether or not they have insurance to pay for the extra cab I had to take and all that sort of thing, I don't know. But that's an example of how these things can influence our lives in a very small way, my life in this case. And I wonder whether or not you have any experience, or whether you're having any conversations about, or maybe it's part of the sales pitch. Listen, your cyber policy may have exclusions you don't know are there. It may not even have an exclusion for AI, but the insurance company is going to view this as something that's not coverable because of whatever reason. So I'm wondering about AI in this space. What are you seeing right now?
Yeah. So beginning around February of this year, uh, the Insurance Standards Office (ISO) started to issue some new forms. The ISO, these are standard forms that about 86% of insurance companies use to build their policies on. So they came out with endorsements to your general liability policy to cover AI liability. And what that means is insurance companies are going to start excluding AI liability on your liability policies. And you'll need to buy an endorsement to have that coverage. Um, and this kind of gets back to I've been comparing it to the advent of the internet and the cyber liability as well, where insurance companies, because it is so new, they're going to start to avoid this risk, and that means they're going to start writing exclusions into it. They're going to start selling separate policies for it, and try to avoid this risk altogether because it's an unknown quantity. So when they go to insure it, an insurance company truly can't understand what is my total risk here, because they lack the claims history, they lack the loss data to really determine the right price for this insurance. And this also gets back to why 831B even exists in the first place. And it is for these emerging types of risk where traditional insurance companies are avoiding it because they can't understand it. They can't wrap their heads around it. And 831B was first passed in 1986. That was around the time of, Star Wars and Reagan and all of that. And so, you had the advent of the internet and all of that going on and technological advances, a lot of emerging risk back then. And so this is exactly the type of thing 831B can be used for, is to begin to address AI liability. Because you can rest assured when the AI liability policy or the endorsement comes out from your insurance company, there's going to be a lot of exclusions in there. There's going to be a lot of potentially sub limits for certain type of losses related to AI, and they're going to do their best to make sure that they're going to be protected on it and making money on it at the end of the day.
I mean, you touch on, I mean, the the range of potential liability. I think I was talking to someone the other day about I think it was an Alibaba AI that was being tested, and it, for a variety of reasons that are as not as exciting as you would make them if you were writing a movie, it wound up, I think it was Sandbox, but it was buying crypto. And I think that the engineers were like, the joke I've made is, why is this room so hot? How come the GPUs are all melting? Right? It had hijacked extra processing power to mine crypto as a result of that. It was getting a better score on its test. It wasn't trying to buy missiles to blow up something or anything like that, but
Not
but
yet.
this idea. So and I thought, oh, that's a cute story. It's funny, it's got like Terminator vibes. But someone I was talking to in the legal world says, well, who owns that crypto if it bought it? And where do you put that on your balance sheet? And if you fail to put it on your balance sheet because you didn't know you had this possession in your corporation, these are complex tax problems, and they have
Very much.
real.
Yeah.
And I, you think about AI making me miss my flight. That's a minor thing. There's a broad scale to this potential problem. Is have you had people come to you and ask about it, or is it still so relatively new given the February timeline that you just laid out, that it's just starting to come on everyone's radar? I mean, as we know, tons of people don't use MFA, and the very basic things that could make cyber breaches much more easier to defend against are not implemented by even significant corporations. Where does it stand? Are we in, is it just a twinkle in our eye at this point, or are you seeing any business from it?
I think in the business owner community, I think it's definitely flying under the radar. Business owners, I think the adoption for AI is still relatively low. Even, a lot of, and when I say that, I'm speaking particularly about small businesses. And so I think it is flying under the radar, but the concerns there are: do you have employees that are using it, and are they on their own personal AI or own personal Chat GPT account, and are they putting company information in there into their free Chat GPT instance? And so there's a lot of questions even there, or a lot of liability and concerns there as well. But um, I think amongst business consultants and advisors, I think it is definitely being talked about, and folks are aware of the potential liability fallout from AI, and you're right. And it's another reason insurance companies are going to avoid this risk, is because the tentacles on this are crazy. You have intellectual property risk for you violating another person's IP, but also yours getting hijacked by a LLM, and it telling a customer that their flight is later than it is. These types of things. There's so many different ways that or areas of your business that AI can touch, and that they're it's wild. And so I think it is, and at least in the business community, consultant community, I think it is kind of top of mind right now. But I think it is flying under the radar of your average small business owner for sure.
And that sort of brings me to sort of the last point. A lot of what we've been talking about sounds kind of mild. It's AI risk, tax code, federal courts. The truth of the matter is, and you just said it, small business owners, is it 60% after a breach go out of business in 6 months or something like that? I know that we've shared this number before, but the risk if you suffer a breach and you're not prepared for it, i.e., you don't have insurance, or the insurance doesn't pay what you think it's going to, or you're not covered in the way you thought you were, or you don't have an 831B that fills this void where you can't do business for weeks in some cases. I mean, I did a podcast recently, and you think this sort of thing wouldn't happen, but a relatively large paper company in America had a breach. They had an incident response plan, but it took them 2 weeks to find every phone number to implement the plan because it was all stored digitally and they couldn't get into their systems. Like that sort of thing is the kind of thing that happens to people who don't plan properly, and it's a lot to put on people, but there is a very real landscape here where this threat can wipe out your livelihood. Am I overstating that? And I ask that question a lot because this is sort of dry stuff, and it's also quite abstract for people. These digital threats and nation states, and some hacker pretending to be in Oregon, but he's actually in Pyongyang is going to. Why would they come after my three dry cleaning chain or whatever it is? And maybe they don't, but maybe that's a way into something else. There is a very real threat here, and I wonder whether you could just sort of illustrate for the audience just how serious a problem this is currently, the scale of it from a financial point of view, and then there's the very personal reality of someone building a business, very passionate, very concerned, as we know a lot of small business owners are, and then having all that hard work done away by something that, in some respects, is entirely preventable, maybe not entirely.
Yeah, it's a significant threat to a business, and the example I always use when talking about cyber, because it's sadly the most frequent claim that we see for people's 831Bs is at least under the cyber portion of it, are phishing attacks, where you have an employee, maybe the bookkeeper, that gets phished, and they get erroneous payment instructions. They wire money an account that was fraudulent. When that sort of thing happens, let's say you're buying inventory for your company, and you're making a six-figure investment in inventory for whatever period of time. uh, if that money is gone, where are you going to make up for that to be able to, one, buy the inventory, but also keep your business going? Because you're going to have to borrow that from cash flow now if you haven't prepared for it. How are you going to retain your employees? How are you going to pay your lease that month? All of this stuff happens when it takes one event for things to go sideways. With Especially when you're talking about the scale of some purchase orders that you might be doing in your business. So I think it's very important for businesses to be aware of it. You know, us as humans, we have a tendency to say, "Well, oh, that'll never happen to me." But we see it every day. Events that happen to businesses that no one expects, but it does happen, and it's better to be prepared for those types of things.
And I think it's an extremely important note, right? We hear about car crashes, and maybe that helps motivate people to drive a little safer, wear their seatbelts all the time. We hear about all sorts of things in the news, and what we don't hear about to the degree it actually happens is cyber breaches that impact
Mhm.
companies financially. I mean, the
Yeah.
the figure you hear is as much as 90% of these things that cost companies real money, that interrupt business for long periods of time, eh, are 90% of them we don't hear about. So you hear about the big hacks, and you certainly hear about the big technical failures or technical hiccups. But the truth of the matter is, when you talk to incident response people who are bound by confidentiality, so they can't discuss the specifics of the case, but no one ever hears about all these things, and that creates this illusion that does, as you put it, leave people in a position where they can think, "Oh, it'll never happen to me because I don't see it happening," right? And it does happen. I mean, is that overstating it based on the sort of things you're seeing?
No, not at all. And I think the SEC passed, I think, regulations several years ago where if you're publicly traded, you need to disclose these cyber events. So we do hear about it from the large companies, but the statistics are that over half of all cyber victims are smaller companies. And I think that's because they're easier targets. They aren't, maybe paying attention to their cyber risk, and they lack the resources to truly protect themselves from that. If MGM a couple of years ago had that massive breach, if they don't have the robust systems in place to protect themselves from that type of stuff, I mean, what makes a small business think that they're immune to this stuff?
Completely agree with you. And we jump across the pond to Great Britain and the Land Rover Jaguar hack, which required a government backstop, basically. And the number I've seen most recently is it cost them roughly $2 billion in loss, basically. And if the truth of the matter is, and this is down to human nature to a degree, if someone had burned down a factory and that's the reason this business had been suffered, and all their suppliers only supplied to one person and they didn't have anyone to sell things to anymore for periods of time, it would have been on the cover of the paper for days and weeks, and there would have been enormous follow-ups, and there would have been mini series about it and made for TV movies. That's hard to do with something that's abstract and for most of us lives around us in we're swathed in the digital reality without being aware of it until it goes away. As I learned yesterday when my internet went out and the website didn't stop working, and I was, I basically had to take a flyer on the day and look at the grass grow. It's all good now. Um,
And,
so yeah,
everything is so abstract now that it's important for businesses to wrap their heads around it because, it's only going to get worse as AI starts to, AI adoption ticks up and gets more advanced. Things are only going to become more abstract into the future. And so it's important to understand it. Even our bank accounts are somewhat abstract now. We're kind of in a cashless society now, and so even keeping track of that for folks is a little different. So
yeah, yeah. As I like to say, we've put enormous amounts of things that we consider very, very valuable into digital spaces. We should be protecting them like they're sitting in our living room or in the trunk of a car. We lock the car, you turn the alarm on. Very, very basic things that once you get them in your habit, in your repertoire of activity, it just becomes the way you live. And more people need to do that for the benefit of the whole economy. There's almost a sort of it's everyone's responsibility because it's costing all of us the way it gets done. Yeah, yeah. Um, Justin, is there anything that we've discussed you'd like to say some more about, or is anything we didn't get to, or anything you'd like to say before we wrap up?
no, I think we've covered a lot of ground today. I appreciate the time, Martin. It's
Oh,
good talking to you.
my pleasure. Always happy to take your contributions to the website. We've mentioned a few things, so there'll be some links in the show notes wherever you're listening to or watching this that'll help you find those resources. Dustin, again, thank you so very much for the time. And again, this is part of me, Dustin Carlson, president of SRA 831B admin. There'll be links to that in the show notes as well. You'll find all that. Dustin, again, thank you very much for your time today. Everyone else, thanks very much for watching. I'm Martin Hinton, the executive editor of Cyber Insurance News and Information. Enjoy the rest of your day.